Okay, so here we are doing our weekend chart analysis or market analysis, pre-market analysis. So we call it our weekend pre-market analysis, and we're doing it on S&P before the market opens. So on the weekends, I recommend cleaning your chart completely off other than important key levels that you have marked on the 4-hour time frame. We're typically, most of the people in the group are intraday traders or day traders. So we're looking at getting in trades, holding them throughout the day, closing out partial trade, letting our runners run, and typically we're going to be out or closing before market closes during the U.S. session. So, but we need to look at the larger time frames to find out key levels in the market, key price points. The market makers, the movers, they're trading off of price levels. They're not trading off of trend lines. Okay, they're trading off of price levels. So when S&P hits certain prices, that's when the bulls or the bears will step in. The bullish side of the market, bearish side of the market will step in and buy or sell the market. So we have to look at those levels that are respected, and we do that on a 4-hour time frame. So here's what we have. We have a couple uptrend lines on a 4-hour time frame. We did not have any downtrend lines as we were making all-time highs. We didn't have any downtrend lines until we had these two swings here, and we basically had one, and then we had a big pullback and then another push down through our old trend line. So this is an old 4-hour trend line. So we had it pull down and bounce near that old 4-hour trend line. Couple bounces. We drew this green zone off of that candle right there, 4-hour candle, and then from the wick, it respected that, pulled back up, get a bigger pullback, and then pushed back down to that zone. So at that point, we took our downtrend line and moved it from, this was our B point, moved it out further and attached it to this B point. Okay, and that's what we've broken through right now. So it broke through that old uptrend line, that zone, went through this zone, which was a key level back here, key price level, off of this big swing down and up. Okay, so broke through that, went right to the other old trend line, old 4-hour trend line, and then pushed back up through the zone, and then even pulled back down to test it again, push back, and then we've seen a big climb up off that. So we saw it push not only back up through the zone, tested and hung out through the top of it for a while, but pushed up through our down, two things, pushed up through our downtrend line, also pushed back up through our old 4-hour uptrend line. So I like to keep those on my chart because they are strong key levels. So I like to keep those trend lines on my chart, but that's why those are dashed. That's why this is dashed. That's why this is dashed, because they are not my outer trend lines, my outer uptrend line. So we have an uptrend line that's below this. So basically, we're between two zones right now. I really don't have to do a lot to this as we look at the smaller time frames. What we're looking for is right now, it's up near a sell zone. So we already sold on over here. When it climbed up, hit that level, we started seeing bearish structure. So we had bullish structure, higher highs, higher lows. It started to round over. We got bearish structure, which was lower lows, lower highs. Well, then we got in short, traded it down to the zone. Now you'll see it pop below the zone. That's why we leave runners on. So we don't just get out when a target is met. I don't use targets at all. I use price points, and I'll set alarms on those, and I will call those target levels, but I don't get out of the trade. We leave runners on in case it breaks through, blows through a level, and continues on. Like over here, very long, it broke through a zone, pulled back and tested. Well, guess what? We had runners on. So we leave runners on. That way you catch more of the move. So the only time you would get out of the trade is if you see structure changing. So as it pulls down and we're on a lower time frame, bearish signal would be lower lows, lower highs. If we see lower lows, lower highs, then we're seeing a bearish structure form. And then we would trade that short. So the only time we would close our runner is if we see higher highs, higher lows, which means that we're seeing bullish structure form. And then we would trade it up to this zone level here. So right now it is between two of our zones. If it breaks through the top of it, because this is the second run up here that it's made at that level, and that's currently where we're at. We're right under that zone. So when market opens, I fully see it going back up to like this high here and testing that resistance level. So the top of the zone, again, is over here, off these wicks, okay? So a high point on a 4-hour swing. So it may pull back during market open and test that. If it goes through that red zone, pulls back, bounces off the top of the red zone and keeps forming higher highs, higher lows, we're going to get in long, and we would come over and mark a zone here. So I'm going to go ahead and mark the zone, back off where our downtrend line starts here, and I'm just going to tag that right there, and that will be my zone target. So I'm going to actually change this one to yellow. Since it's right at it, we'll change it to a mid zone. Doesn't mean it's going to be broken, but these are real key price points, so I have to keep those on the chart. I'm not willing to take them off because that's where we are right now. You look at how those price levels are respected, and that's what we need to be aware of over here as it's up there. Now this one, I have to look at, do I want to change it? Do I want to keep it? I'm probably just going to keep it where it is because I could see where, you know, we had a nice bullish swing here. It popped to that price level, and then boom, we had a huge bearish swing. So I definitely want to leave this on the chart. However, we had a candle pull and close below that. So I need to be aware of that price point as I'm down on a smaller time frame trading. Okay, so basically what that means is I need to widen my box a little. So what I'm going to do is probably, we'll grab the bottom of the box, and I'm going to look at pulling it right there. And what I did was basically I looked to pull it at that candle body right there, and it did not nab it. So right there it is. And again, I basically have it at the wick high on this candle, this green candle, and then the candle body here, the close of the candle body. And pulling it down there, it encompassed or encapsulated that swing, okay, that candle that closed under. So that's what I want to see. So it pulled down, closed below it. So that is what I'm going to have as my green zone right now. Now you can leave it green, you can leave it yellow if you want. It's up to you. I like trying to color my zones because we don't really know exactly what is going to happen. We just need to prepare ourselves for what might happen. Okay, you guys hear me say bullish, bearish, or whatever. I don't care what the market does. I just need to be ready. So right now it's at that yellow zone top, which used to be red. So it could full well bounce off that, head back to the green zone, give us another bounce. We're going to leave runners on. So if we're in short on that, we'd leave a runner on back to this, which is our old uptrend line, and then look for a bounce or break of that. So leave your runners on. And if you get in long, I'm not getting in long till that, if this zone is broke right here, and if we see that break of that zone, and I want to see a bounce off that. So I would want to see price go through the zone, testing this high over here. I want to see it come up through the zone. How high it goes, who knows? And then I'd want to see it come back, and I would love to see it bounce there. Love to see a nice retracement. Green candle when I'm in, and I'm going to trade it up to that zone up there. So if we're short, if we see it rounding over, and we've had a nice bullish move, we need to dial it down to that 5-minute, 3-minute, and once market opens, I'm going to look to see, is it going to round over in the zone? It might pull up in the middle of the zone somewhere, start rounding over, and we're looking for a structure change. So right now in the smaller time frame, we'll see higher highs, higher lows. But if it starts to round over, move sideways throughout part of the night, we see lower, lower, lower high. Well, that means that structure's changing to the bearish side, and we would look to get in short. We would also want to draw a trend line up these candles. So see these 4-hour candles here? I'd want to draw a trend line up those candles. I'm ignoring the wick on that because it's so long, and I can't really draw a line off that. I mean, I can draw a line from here to here and extend it out, and that'll be my outer, say, uptrend line. But we can see a nice candle formation all the way up that. So once you notice that pattern, go ahead and draw a trend line on that because it may hold up, it may pull down to that. But ultimately, if it starts rounding over, well, then we're going to look for it to come down to this zone. Don't expect it to move like it did over here. This was a straight shot. We don't always get that. Don't expect it to move like this candle. That was a straight shot down, the red bearish one. So look for it to build up structure, lower low, lower high, and then, or even come back to test that once again before moving on. So you guys know it moves in waves. So this may be more of what you see, and then you want to close out partial before it gets to the zone, because it may turn. So definitely lock in your daily profit. Don't let that go by. If you have profit, lock in profit. So close out part of your trade, locking in your per trade amount that you need to make your monthly goal off of, your paycheck, whatever you need per month. And I'm not going to go over that again. I went over it in one of the other videos. We've gone over a lot. You should have a monthly goal that translates down to a daily goal, down to or a weekly goal, down to a daily goal, down to a per trade goal. And then you want to just do that every day. That's your target. Our runners stay on. So we leave a runner on. We'd have a trend line down, and we're following that. And then if it starts to break through the zone, we hold that runner on in case it does go here, in case it does go here. I don't want to look for another entry. If I'm already in short and I have a runner on, I'd rather hold that runner. That's a bonus trade. Can you see it going all the way down here? Who knows? I can't predict that. Nobody can. So in the meantime, all we're going to do is hold our runner. And then if it, again, starts to roll over and start to turn, and then we see, lower lows, lower highs over here as it goes down, but over here start to form higher highs and higher lows, well then higher high, higher low, we would look to go long. I'd have to see it go through the zone, test the top of the zone before moving on to that target. And then of course we have our upper target up here, okay? So that's how you have to plan. And then we go down to the 60 minute, go down to the 15 minute, and then most of us are in that day trading. So you can see the nasty wicks that we had here. These are 1 hour candles on Friday. There's the 15, and we're sitting right up that. So as we look to go down to a 5 minute, 3 minute, we're seeing right now this is holding up as resistance. So that's how our zone works. And we look for a 5 minute or 3. And this is where we look for it to roll over. Now this is the end of day Friday. So the end of day Friday, it was still in a bullish move. You have a higher low here, higher high, higher low, higher high, higher low, sideways. When market opens, we need structure to build up from the market open. So we've got about 6 o'clock p.m. Eastern. Market will open. I don't like to trade right at 6. You'll have gaps typically. So I don't look to get in till 8. So 8 o'clock to 9 o'clock, or 8 o'clock to 10 o'clock, get in some trades, close partial, let some run, and let some runners run throughout the night. So as far as alarms go, I would go ahead, and I know I'm on a 5. I normally jump to a 3. We're not going to see much different on the 3. It's sideways. Okay, so 5, 3. What I want to do is mark some levels and set some alarms up. So I would actually come in and set up a level here. Wrong tool. Let me get rid of that. Actually, I'm going to turn this on down there. All right, so I like using the ray tool. So I would look and see, there's a low there. I want to be more aware of this one right here. And I could see that it was kind of respected right here with these candles, that wick. If you come back here to that right there. So just look at how many times a level was respected. Here it pulled through, pulled back, candle closed right at it, pulled down. We had a push down here, kind of tapped it, push down here, kind of tapped it. So don't be surprised if it pushes down there and taps it. Okay? I'm more interested in a candle if a if a candle blows through it. So what I'm going to do, come set up an alarm once per bar close. I don't think I've got the script in here right now. I just sent one up. Yeah, it's going to be more like this. So let me pull this script because I want to know, and that's the wrong. There we are. And then we need to go back to ES here. This is going to be alarm on the ES. So I want to come and put that in. And we would go in and just type ES. broke SR level. So this is a this is a script that will pop that out. I also need to take out close because we're not putting in a stop order. We're not trading that. So we need that. It's going to come out, give you the time, and put that ES broke the support level. And now we have an alert on that. So let me go back to ES. It'll change charts if you pull alerts off of another. All right, so now we have an alarm on that and alarm script. So now if that goes through and pops through that and the candle closes past that, we're going to know that it's broke that level. And then ultimately also I need one above. So the one above would be up here, and you would set an alarm on that as well. I won't set that up now while we're doing this since it changes the charts back and forth. But that would be my alarm level for it to go, for us to possibly look to go long. We want it to break through the whole zone though, and that's a pretty big zone. So if it breaks through this high, look for it to pull up, look for it to pull back, and test that level. Okay, now I don't know what it's going to do. Nobody knows what it's going to do 100% when market opens. So it could do something like that. Okay. Oops. I always forget to double tag this tool. You know, we could pop down through, could pop back through this little zone, test this level, and move short. And it could just target up here inside the inside top right here. And it could break and go through. Okay, so I would definitely draw another one. I'd take the tool and just put it here at the wick on that candle. And that's that inside top and bottom. That's an inside bottom. So what an inside top and bottom is it's the inside of a swing. You guys have seen price where it just won't always get to your target. Now you see I drew a line here. You'll see where it may not get there. It may pull up and just stall out and pull back down. Well, what it may get to is this high right here. It may get to that candle close, and that's it, because that's where it turned right here. Okay, so it may just get to there. So what you want to do is definitely mark these, and this label that as an inside top and bottom. I don't have those. I'm just going to put support and resistance level on it. I don't have it marked as inside top or bottom in my defaults. So support and resistance level. So why do we want to mark that? Don't be surprised. It keeps you from getting surprised if it pulls down there and just bounces back up for a minute. It may pull back up to test this level and then pull through. Oftentimes, price will reject off a level to come back to test another level before moving on. Okay, so you have to be prepared for that. So that's how I'm going to prepare for tonight. Again, I don't like to trade the first 2 hours of market open on a Sunday. I like to come in 8 to 10, and that's when I'm looking for entries. Now, I don't have to find one. So if nothing's set up, I don't take a trade. Something else we'll do is I'm on a smaller time frame, 3 minute, 5 minute, as we're looking for market structure and entries. So one thing I want to do is, if I'm going out to dinner tonight, so we're going to get there at 5. So when market opens, we'll be out. I'll probably be in the car driving back. It's about an hour drop. I don't really care. I'm not going to look at the market. So let's say I get home and I don't even want to mess with anything tonight. Just don't want to mess with anything. And I decide that I don't want to get into a trade. I'd rather wait for the U.S. market to open tomorrow morning. One thing I have to do is I always like to do this. I always like to dial down and back out to the higher time frame and leave my chart set here. I recommend everybody do it because I need to refresh my memory. I'd like to think that I can remember where everything is while I'm down on a small time frame. But I'm looking at 6 to 8 different instruments and analyzing 6 to 8 different instruments. So what I like to do is look at gold and oil first, see if I can get in on those. If I can, then I like to look at ES, see if I can get in a trade, let runners ride on that. And then from there, I'll look at other things like NQ and Platinum and Russell and some other things. So I'm analyzing about 8 different instruments. So I'd like to think I can remember where they're at. All of them are. And on the 4 hour time frame. I'd love to remember where the 4 hour time frame is on every instrument I look at. However, I want to put the odds in my favor. The odds are in my favor that I might not remember where everything is on the 4 hour time frame. So I need to battle those odds, right? So let's put our chart back on a 4 hour time frame before we walk away from our computer. So now, when I get up in the morning and I come and look at my charting, I'm stuck. I'm stuck looking at the 4 hour time frame. I have no choice because when I log into my computer, this is what I'll see. I'll see it on a 4 hour time frame. It reminds me, well, let's look at S&P, see where it is on 4 hour. Let's scroll back to oil, see where it is on the 4 hour. Let's scroll back to gold, see where it is on the 4 hour. Okay? So I need to look back on the chart. So this gives me, it forces me to do that. So basically putting the odds back in your favor, that you can recognize what's going on a 4 hour time frame, because it's going to change. It's going to change overnight. It is not going to be where it is right now. So when I go out, if I don't do anything tonight and I look back at this, tomorrow morning at the start of the U.S., I normally come in at 7:30 or 8 to start looking. It will not be here. Price is going to go up or price is going to go down. It could move sideways for a while. I don't know. If it moves sideways and gives me a good solid support level, good solid resistance level, and it's range bound, I can trade that if I want. Little riskier trade, less contracts. Okay? Take that into consideration. But then I'd look to trade a breakout. But if I don't mess with it, I know price will not be here. That is one thing I can guarantee for every one of you. People always ask, which way is it going? Is it going? Should I buy or should I sell the S&P right now? You know what? I could tell you right now, nobody knows the answer to that. There is not one person on planet Earth that can tell you that it's going short or long. All they can do is look, try and put the odds in your favor by analyzing the chart. Look for the market structure. Look for higher highs and higher lows to build for a long position. Look for lower lows, lower highs to build for a short position. That puts the odds in your favor and trade. If you still think it's a riskier trade, put on less contracts. Again, if you put on 10 micros for 100% setup, if you see a 70% setup, you could do 4. And then if it's an 80%, do 6. And if it's a 90%, do 8. If it's 100%, do 10. That's how I'd break it down. That's how I like to break it down for anyone doing 10. If you're doing 20, you're just going to multiply what I went through by 2. Okay? 8, 12, 14. Limit your risk. Okay? So all I can tell you for 100% certain is price will not be where it is right now. It's going to move sideways, up and down. Okay? So be ready for those 3 things. Be ready for sideways. What are you going to do? So if price moves sideways and it does not come down to break the support level, it does not come up to break this high and it moves sideways, what are you going to do? Are you going to sit out? That's fine. Sit out. If it breaks this high, are you going to look for it and wait for it to break through the top of the zone, come back down to test it, and then give a green candle and that's your entry? Well, then that's your entry. That's your plan. So you want to plan your trade. I know a lot of you have heard that 1,000 times over. Plan your trade, trade your plan. So my plan is to trade it long if it pops up through the zone and tests it. My plan is to also trade it short. If it pulls back down, pulls back up and gives me a short signal. If I see that lower low, lower high build up for structure, I'm trading short. If I see a higher high, higher low, I'm trading long. Those are my plans. That's my whole plan for trading this because I know it's not going to sit where it is. All right. So I enjoyed doing the video. I hope you guys enjoyed it. And I will see you on the next one.